Hey everyone, thank you again for joining me. This is Christopher Aaron from iGoldAdvisor.com, and it's the middle of the week. It's October 28th, and I do apologize for not posting a weekend update last weekend. There just wasn't enough action going on in the markets to warrant an entire update, but today being Wednesday after the Federal Reserve meeting, we have a lot of action going on, and I just wanted to provide this update so everyone can be clued in on where things stand with the gold and silver markets. So we are looking at the impact of what happened today with the Federal Reserve meeting. Now, for those who are new to the gold and the precious metals markets, the Federal Reserve meetings often have somewhat of an impact on these markets, as traders in the currency markets and other commodity markets tend to view this kind of information and attempt to bet one way or the other how other markets are going to respond, which impacts the gold and silver markets. So we just want to look at that for today, the fundamental driver, this being of some of these markets. Of course, they decided to leave the basic federal funds rate at nearly zero, which has been this level down here shown on the graph for about the last 6 years. Now, for anyone who is kind of just tuning in to the Fed and their activities for the first time, this is something definitely to pay attention to. You can see on this 65-year chart here showing this interest rate, which is basically the interbank lending rate that the Federal Reserve is the primary decider of. This rate here being around 0%, basically for the first time in 60 years. And not only that, but being held at this 0% level. So whereas holding it down here around 2 and 1% back in the mid-2000s is what caused the entire housing bubble and the subprime and the banking crisis, well, the Federal Reserve has gone once again and lowered interest rates even lower and held them lower for a longer period of time. So we're kind of looking at this and we're saying, what sort of bubble is this driving right now? Is it the stock market? There's a distinct possibility that there's a bubble type of activity forming in the stock market. Could it be in some other markets? Absolutely. But the point really here is to just be aware that this is, when I talk about historic bottoms being formed in the precious metals, this is one of those reasons, because you have this low interest rate environment being held here for an unprecedented amount of time. And just so we're clear about this, if you study the workings of the Federal Reserve, you will learn that these interest rates are not just controlled. It's not like they just press a button or a lever and decide what the rate is. The way that they control these interest rates is by printing enough money and then taking that money and going into the treasury markets and buying enough of these short duration bonds to basically drive the price so high that the corresponding interest rate is driven lower, because the price and the interest rate of bonds are a seesaw. Basically, the higher the price goes, the lower the interest rate goes, and vice versa. So by the Fed printing all this money, buying all these short duration bonds, they are driving the interest rate down to this historic low for the first time in history. So we are watching something unfolding right here that is unprecedented, and I just want people to keep that in mind as the weeks and the months advance ahead. This is one of those fundamental drivers that I'm speaking of when I say we really are embarking on something quite crazy here. And so I want to do this presentation a little differently. Let's just look at how this decision to keep interest rates at 0% impacted several different markets today. First, let's look at the broad stock market as represented by the S&P 500 in the United States. So here is the action for today. You had the market higher, And then when they released their non-decision, basically, you had a very quick sell-off in the stock market, almost as if some people panicked out of the market when they learned that interest rates would be held at 0%. And then what happened? After the panic selling, more buyers came in and actually drove the stock market significantly higher for the day, getting back close to the all-time highs. I believe the S&P 500 all-time high is somewhere just above 2100, 2110 or so, if my charts are correct. So it's just interesting to watch this here, this sell-off and a rebound in the S&P 500 after the Fed decision. Now compare that to what happened in gold. Okay, we're going to do this a little differently. So you had gold that was also higher on the day, and then after the decision, selling off and having a very weak recovery. Unlike the stock market, which recovered back most of its losses and finished higher, gold did not. Now look at silver. Okay, very interesting to watch the different assets responding to these politicians and these central planners who are attempting to override the market in the short run, which they can do. Of course, they cannot control the markets in the long run. But here in the short run, silver selling off also after its attempt to break out over that $16 level we've been watching. And if you notice here, attempting that breakout, like I said, selling off and then having a bit more of a recovery, finishing positive on the day just by about 8 cents, whereas gold finished negative on the day. So look at this comparison here. This is very interesting for people who are trying to understand how these metals fit in with other assets. Okay, this shows the S&P 500 as represented by the black line here. It shows silver in the blue line and gold in the red line. And this is over the last 5 days, starting at the same point for all asset classes, as if they were all equal at the beginning of the week. Okay, so it's a relative comparison. So you can see the stock market finishing up this week by about 3.5%. Silver here today, even despite that fall, finishing up about 1.75%. But gold here, let me move my video out of the way really quickly. Gold actually finishing negative on the week, almost down 1%. So what this is showing is some of this correspondence that I've been talking about in the gold and the silver markets. And it's just to be aware of if you're an investor in gold and silver or just gold. These metals sometimes do move like this in diverging ways over some periods of time. So what you could see here is what's happening with silver is it's selling off as the precious metal is selling off. As the bigger brother gold is selling off, silver is selling off. And then it was rising today when gold barely rose. Why was it rising today? This is the industrial demand that's coming back into silver. And you can see that because the stock market, which has a much larger industrial component, is what it is moving with here. It moved at the end of the day with the stock market, whereas gold did not. So, what does this mean? I mean, in the short run, what it means, it's actually a positive for silver because you're looking at a metal here that has the backdrop of a significant industrial demand. Over 80% of the silver that's produced every year goes toward industrial demand currently. Now, the thesis that I am proposing, that I subscribe to, is that at some point you are going to have this marginal investment demand come in and basically overwhelm the market, because 80% of the market is going toward that industrial jewelry, silverware, fabrication. So, here, whereas gold, still a very much higher percentage of gold is for investment purposes. Yes, there are some industrial components for gold that are very important, but as a percentage, I don't have that number in front of me right now, but I know it's significantly lower as far as the industrial percentage, significantly higher for the precious metal store of value component. So it looks like here these metals may actually move in a divergent way for some time. So let's just put this into perspective. It's just something to keep in mind if you're invested in one over the other. Eventually, these metals will move together over a long period of time. But as the transitions are happening, we can often see this divergence developing. So don't be frustrated one way or another. Just understand what's going on here. So let's get right into this, putting this back in perspective again now for gold. We showed this 6-month chart last time, and you still have this breakout from this triangular consolidation. We have this short-term teal uptrend that is now formed after this line was broken. So you came up here, you passed this high, and now we've sold back off, including today. It still looks to me like this is forming a retest of this breakout. So that may come a little bit lower here in gold over the next still week or 10 days. But I still do believe that gold over the intermediate term is about to accelerate higher after this retest happens here. Oftentimes markets need to come back and retest a line that they just broke, usually several weeks later. So I think that's what we're seeing here now. Look at that on the 1-year perspective. Again, the consolidation, the break above that, and it looks like we're coming right back in here toward the apex of this consolidation, after which I am still predicting that we are going to accelerate to this primary long-term trend line here, somewhere in this green region, 1230 to 1245, in that region there. Now, could this be wrong? Yes. Technical analysis is not 100% certain. What it does do is it gives us a good idea of what the possibilities are, what the percentages are, what is happening underneath the market, and what is the likelihood here. It's a roadmap, and sometimes markets move a little bit away from the roadmap, but this gives us a good idea of what to expect here in all likelihood going forward. So that is with gold. And again, just putting that in perspective for anyone who is new to this, we are looking at the reason why that is going to be so significant. When gold does retest this long-term downtrend here that's been forming over the last 2.5 years, we will be looking to see, does it break out of that downtrend? And if so, we have a very strong confirmation that the bottom has been put into place back here in July. How does that look with silver? Now, here was that move higher. Look at this consolidation that's been going on basically since the beginning of October. I spoke about this in the last couple of videos. You had this back and forth action. And today it looked like it was about to break out. Remember that green line on the spot price chart looked like it was about to break out. And then what happened? It sold off. So that shows up here as this one line. If you look very closely or zoom in, this one line popping up here and then getting forced back down below the long-term trend line. Now, oftentimes when this happens after a consolidation, this is what we call a false breakout. And all markets make false breakouts. They make attempts, and sometimes they're proven wrong, and the sellers overwhelm and come back in. So even though silver closed a little bit higher today, whereas gold did not, it actually looks to me like this is probably a false breakout for silver in the short run. So what I would be expecting is for silver to come back down over the next couple days to a week or two. And it looks like we're going to be testing this uptrend line, the short-term uptrend line that's been going on since September, shown here in teal. Teal always representing the short-term uptrend lines. And this will start to form sort of an apex here, coming in probably into November or early December. And we'll be watching that to see which way does that break. Now, for anyone who's new to my charting system, I just want to remind you, I keep these colors the same, and these are really designed to take your focus and bring it in to what is really important here, going from a longer term perspective to a shorter term perspective. These are the colors that really help my eyes to focus in that way. I tend to be a visual and a color-oriented person, and it just helps me in my analysis of the markets. If I'm making a trade, it really helps me to see things in a very quick, kind of concise way. Some other people, when they're doing charts, they have everything, black and white, or maybe just with blue lines, and it just gets so impossible for me to make sense out of what the different lines are. I feel like this is kind of the most logical way, at least that my brain processes these things, and hopefully for some of you out there, that is also true for you. So anyway, just to get back in here, we had what looks like a false breakout. Where does that bring us? Here's the 5-year chart for silver, and we are coming right in here. Look at this, look at this 2.5-year primary downtrend, but it's such a weak slope here. This is definitely a bottoming trend line. So I just want to move my video out of the way here so you can see that again. So look at here. It looks like an attempted breakout that failed. It was very close after, 1, 2, 3, 4, 5 hits on this line. Very close, and got shoved back down. So usually when you have these false breakouts, it just means that there's some weakness that's going to come over the next days to weeks. So given that we've been in this this weak downtrend here over the last couple years, most likely we're just going to come back here into the middle of this downtrend, somewhere in that $14 to $15 region over the next couple weeks. So basically, what does it mean? We're still in the downtrend. The downtrend has not broken yet. So we're anticipating it's going to break. That's why I'm making these videos. It's basically to start alerting people, to start showing people how these bottoms are being put into place. And when this does break, we will have a very, very strong confirmation that whichever low was our final low here was the bottom for this bear market. And then, of course, there's a period of time of back and forth consolidation and eventual rising. And there will be plenty of time to add to positions after that. But it'll give us a very strong confirmation when this downtrend breaks for real that we have turned the corner in the silver market. Moving right along. Just a final summary here. I'm going to move that back over. And, so we had the Fed decision today. We talked about this. It's unprecedented what's going on right now, guys. It's money printing, and these actions have consequences. And oftentimes there are multi-year, delays between when all this money is being printed to drive down interest rates by buying all these bonds, that money getting put out into the economy, and it has ramifications eventually. So we are watching for that. And for people who are investing in precious metals, well, you subscribe to the thesis that I do, which is that the eventual beneficiary of excess currency printing is that these metals are revalued to reflect the increase in the money supply. Gold still retesting that triangular consolidation. We still have that same target for after the retest happens, 1230 to 1245. Silver looks like a false breakout today on that major 2.5-year downtrend. So that may lead to a fall back now into that zone, which is not that much of a fall, maybe $1 or $2 into that fall, and we'll be watching that over the next several weeks. And this is basically the last point that I just want to mention today. We may see these metals diverge for a period of time. It actually looks to me like if you're going to have this move higher in gold, and if silver is going to fall back into this downtrend zone, you may have this divergence start to develop here. The stock market is approaching its highs. So if the stock market were to roll over here, that may account for that weakness that I'm predicting in silver, and that may account for that strength that I'm predicting in gold. Of course, these just being sort of really intermediate term trends over the next several weeks to several months, and nothing that's going to alter the long-term trend, which I believe is going to be significantly higher for both of these metals. So, guys, thank you again for joining me. This has been Chris Aaron. I just wanted to mention to people that I am working on a new product that I'm going to be launching over the next several weeks. And that is basically going to be a free newsletter for anyone who's interested. It's going to contain some of the analysis that I post here in as far as the charts. It's going to be in printed format so you can look at those at your leisure. And then I'll also have some other analysis that I'm not posting here in those newsletters. Some stuff that just goes better into a written format. So that's just to let you know that's coming down the pike. Not yet. Probably in the next few weeks I'll have the first issue of that out. Thanks again for joining me, and we will see you this weekend as market conditions warrant. Have a nice rest of the week.